If you live in Japan and you've saved a little, you've heard two names on repeat, NISA and iDeCo. Both are government tax breaks. Both are good, but they are not the same tool, and which one you fill first can change how flexible your money is for the next 30 years. Let's untangle it. Here's the trap. Most guides just say use both. Technically true, but almost nobody can max both from day one. NISA lets you invest up to 3.6 million yen a year. iDeCo for a company employee without a corporate pension is capped at 23,000 yen a month, about 276,000 yen a year. So the real question isn't which is better. It's, with the money I actually have this year, which box do I fill first? And for foreigners, there's a twist the Japanese language videos rarely mention. We'll get to it. Quick note, this is education, not advice. I can't tell you what to do, but I can show you the Shikumi so you can decide. 3 differences matter. Write these down. Difference 1, the tax break arrives at a different time. With NISA, your gains and dividends are tax-free forever. There's no time limit on the tax-free period. That matters more than it sounds. In a normal brokerage account, profit on listed shares is taxed at 20.315%. So if an investment grew by 1 million yen, the tax office would normally take about 203,000 yen of it. Inside NISA you keep all of it. But here's the flip side. Putting money into NISA does not lower this year's income tax. iDeCo is the opposite twist. The whole contribution is deducted from your taxable income now, so it cuts this year's income tax and next year's resident tax. The catch: iDeCo is taxed when you take it out. Those special deductions soften that. In short, NISA rewards you at the finish line. iDeCo rewards you at the starting line. Difference 2, getting your money back. NISA money you can sell and withdraw whenever you want. iDeCo by design is a pension. In principle you cannot take the assets out until age 60. That lock is the price of the upfront tax break. Difference 3, and this is the part for us. Here's the twist for foreigners. If you leave Japan before 60, NISA is tied to being a Japan resident. You close it out and move on. But iDeCo does not simply hand your money back when you board the plane. The scheme is built to stay locked to age 60, and the conditions to cash out early are narrow. So a 23,000 yen tax break today can become money you can't touch from abroad for decades. Not a reason to avoid iDeCo, a reason to know your own timeline before you lock the box. Let's put numbers on the iDeCo tax break, because that's its superpower. Say you contribute the employee cap, 23,000 yen a month, 276,000 yen for the year. That full amount comes off your taxable income. Income tax in Japan is tiered from 5% up to 45%. And on top sits resident tax at a standard rate of 10%. Imagine your next 276,000 yen of income would have been taxed at a combined 30%. Deducting it saves you about 82,800 yen. In 1 year just for routing savings through iDeCo instead of a normal account. That is a real upfront return that NISA does not give you. The trade again is the lock to 60. So here's one way to think about it, not a recommendation, a framework. Ask yourself 3 questions in order. Is my time in Japan open-ended, or might I leave? Do I have taxable income this year that a deduction would actually shrink? And can I truly leave this money untouched until 60? If you might leave Japan, or you want the money reachable, the flexible box tends to come first. NISA keeps its value tax-free without ever trapping the cash. If you're staying, you have taxable income to shield, and you won't need that money before 60. The upfront deduction is a lever only iDeCo pulls. One more detail people miss. You can keep contributing to iDeCo up to age 65. So starting a little later is not a closed door. Many residents eventually use both. The framework just tells you which one earns its place first. 4 steps, no advice, just homework. 1. Check your iDeCo monthly cap. It depends on your pension category. A self-employed person, Daiichi Go, can do 68,000 yen a month, a covered employee far less. 2. Map your timeline. Is there a real chance you leave Japan before 60? 3. Decide if you value a tax cut this year more than access to the money. 4. One warning: if you file U.S. taxes, funds held inside NISA or iDeCo can still be treated as PFICs by the U.S. That's its own video and its own headache. Talk to a cross-border professional before you buy. This is general information, not financial advice. Rules and limits change. Always check the official sources linked below, and for your own situation, talk to a licensed professional. NISA gives you freedom later. iDeCo gives you a tax cut now and locks the door until 60. Match the box to your own timeline. That's the Shikumi.